If you're new to reading stock charts, you might be wondering if it's better to look at daily or weekly charts. The answer here is both. Daily charts give you a detailed look at a stock's action at key moments, whether that's reaction to an earnings report, analyst commentary, or news reports about the company. And that granular detail is important for identifying buy points. But weekly charts cut out the noise of daily fluctuations and give you a better view of the big picture, keeping you focused on underlying trends. Let's take a look at Ollie's bargain outlet, starting with a daily chart. Look at November 21st, 2017. See how the stock was climbing sharply and rising above average volume? That's what you want to see in a lead up to a breakout, which is the ideal time to buy. We'll cover breakouts in greater detail in upcoming videos. The daily chart here shows Ollie's clearing a new buy point in heavy volume. Okay, fast forward to June 8th, 2018, and the daily chart reveals a great deal of fluctuation from session to session. That volatility could have spooked you into selling too soon. But if you'd looked at a weekly chart for the same time frame, you'd see that the longer-term view smooths out the daily volatility that followed, making clear the stock's underlying uptrend. On a weekly chart, you can see that over the months, Ollie's has continued to find support at its 10-week moving average, something you wouldn't necessarily have spotted on a daily chart. Using a weekly chart can help you to sit tight and hold on to shares that you might have otherwise gotten rid of, giving the stock time to climb higher. Ollie's is just one example of how you can use daily charts to pinpoint the right time to buy and weekly charts to figure out whether you should keep holding on to a stock despite daily volatility.